For any specific financial or investment advice, please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hello there. It's Chuck. It's Mike. It's Tucker. All three of us here for the Financial Exchange. And
Guten Tag.
I cannot get enough of just how bad this FTX story keeps getting, because basically every time that you think you've seen the worst of it,
more garbage
it gets
comes
worse.
out. Yeah.
So I got home last night, and I had text messages from three of my friends, which again, it'll tell you that I've been talking about this with everyone, because it's mind-blowing just how bad this situation is. And they said, did you see this article? And basically, Sam Bankman-Fried, who is the former CEO of FTX, what was a large cryptocurrency exchange, he decided for some reason that he was going to exchange direct messages or DMs with a reporter for Vox.
In fact, I believe he reached out to the reporter.
And afterwards he was like, oh, I didn't know that this would be made public. And it's kind of like, well,
If spoke to a journalist.
And obviously,
on the record.
I'm sure that if there were any questions about whether or not it should have been made public by now, Kelsey Piper, who's the journalist, it probably would have been pulled from Vox at this point, because there would have been something like, oh, yeah, he said don't talk about this. This is off the record. But so
Can you say something's off the record when you write it?
Mike, I don't know what the record is, man. I've always wondered about, what does that actually mean?
Consider this off the record. I know you're holding a recording device and we're writing this on Twitter, but...
yeah, you can report it, but you have to report it as anonymous.
Background sourcing, not a primary source, basically. Right. So here are just some of the quotes, because I just want to start here before I get into the FTX bankruptcy filing that was published this morning, because there's just so much here. And these are just, again, some quotes from Sam Bankman-Fried. Quote number 1. This one's going to go really well as you're trying to avoid going to jail. F regulators.
And when asked about...
they make everything worse. That's not the kind of thing that you want in print with your name on it when you are accused of defrauding millions of people.
Well, this guy knows that he's going to jail for the majority of the rest of his life.
I don't know that he does.
When asked about... he kind of made fame in this space by encouraging regulation, and he then confirms in this interview that it was just PR.
But so one of Sam Bankman-Fried's things was this idea of, quote, effective altruism, which is just mind-numbingly stupid in and of itself. But the premise of it is that you should try to consider with your money doing altruistic things that not just benefit the people around you, but people hundreds of generations into the future and solving their problems. And it's like, how the heck am I going to know what their problems are? Did Christopher Columbus wake up one day 600 years ago and be like, man, we're going to need oil in 2022, so I should figure out how to solve that problem? No, he didn't even know what oil was. They didn't have oil the same way that we do now. It was from whales back then, man. Okay? You didn't have Edison sitting around saying, gee, we could really use a source of sustainable power. I'm going to try to invent fusion. No, he didn't know about that.
Okay. Let's keep going through this interview.
But no, I have to start here because this forms the basis of his philosophy and how he thinks about things. And if you have such a mind-numbingly dumb idea as considering 100 generations ahead as how you should, conduct your life, you don't know what their problems are going to be.
Well, I don't know why we would even consider to believe that to be his actual fundamental belief.
Because it turned out he was...
Yeah, it turned out it was just a lie.
It's not. And so, basically, he goes on, and again, in this interview, I guess, is what
I'm going to call it an interview.
So the person interviewing him says, quote, "You were really good at talking about ethics for someone who saw it all as a game with winners and losers." Yeah, I had to be. It's what reputations are made of to some extent. I feel bad for those who get effed by it, but this dumb game we play where we say all the right sibilants so everyone likes us. Basically saying, I said all this stuff so you would think I was nice.
Yep.
Just sounds like a complete sociopath. I mean, like...
Yes.
Like, sounds no different from the Enrons of the world. That, like, basically all of your worst business corporate governance people sounds just like them, even though he was trying to pretend that he was someone else. And he still doesn't understand, like, what he did wrong. They asked him, what was the problem here? He says, quote, "Messy accounting, margin exchange, position built up over time." No, like...
You stole everybody's money.
You stole people's money, And the worst quote on this, okay, is one where he said... There's two. The first is they asked him, what was your biggest, mistake? He says, filing for Chapter 11 bankruptcy. Quote, "If I hadn't done that, withdrawals would be opening up by the end of the month with my customers fully whole. Instead, I filed and people in charge of it are trying to burn it all to the ground. I might still get there, but no way after." He still thinks he's going to raise $8 billion. No one trusts you. You're not going to raise any money. It's not because you filed Chapter 11 bankruptcy.
No.
It's because you stole everyone's money. It's because you stole everyone's money.
He's clearly very, very...
delusional.
He's delusional. He is also very feeling as though he got burned by... Who's the Binance CEO again?
He has the same initials as me. His initials are CZ. I can't remember his actual name.
Yeah, it's not Chuck Zodda. But there is some truth to all this, it looks like, because the CEO of Binance did take some tweets that were out there and start pushing them across crypto circles, which did lead to some of the money being pulled out of FTX. But
it was because you were defrauding people.
It was because he was defrauding investors.
And his other quote that's just really bothersome to me, quote, "Each individual decision seemed fine." No. And this is where we get into the actual filing in Delaware Bankruptcy Court. Okay? The filing is being led by John J. Ray III. If you're not familiar with John Ray III, he's the guy that did the bankruptcy cleanup for Enron. So he's seen some stuff.
Yeah.
All right? I'll open with the first page. "Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here." This is from the guy who oversaw Enron as it was being cleaned up. "From compromised systems integrity to faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, the situation is unprecedented." Right off the bat, basically, hey, I can't trust any of you. He then goes through the four major subsidiaries and basically says in each one, the balance sheet shows X in total assets. However, because this balance sheet was produced while the debtors were controlled by Mr. Bankman-Fried, I do not have any confidence in it, and the information therein may not be correct as of the date stated. Hey, we don't trust any of the information that's in here, basically. The other piece, okay, that is really astounding here. All of the financials that were produced for these companies did not include customer deposits as a liability for FTX. Which is mind-blowing. That is your own, that's your main liability, the fact that those customers can take the money, and if you've borrowed anything against it, you're in a hole and you can't dig out, to the tune of $8 billion. Other things that are really bad, okay? Just, again.
You know what's interesting about this, just so far that you've gone through, is the points that he is making seem to be concluding more on the side of negligence and idiocy rather than intentional fraud.
It starts getting towards intentional fraud in a little bit. Many of the companies do not have appropriate corporate governance, so they've basically put people in charge. Like, the guy who's heading up the main U.S. affiliate for the restructuring now is the guy who's dealing with Puerto Rico's restructuring. So, again, they're bringing in some pretty heavy hitters to deal with this. Cash management. FTX Group did not maintain centralized control of its cash. Cash management procedures included failures included the absence of an accurate list of bank accounts. They didn't even have all their bank accounts written down anywhere. They also had insufficient attention to the creditworthiness of banking partners around the world. So they had money
deposited places that didn't necessarily plan on paying them.
Because of this, the debtors do not yet know the exact amount of cash that FTX Group held as of the petition date. They don't even know how much money they had then. Okay? It gets worse. The audit firms for their financial statements. For one of them, okay, for specifically the main, FTX, the FTX.com, the audit firm for the .com silo was Prager Metis, a firm which I am not familiar with and whose website indicates they are, quote, the first ever CPA firm to open its metaverse headquarters in the metaverse platform Decentraland. That's who was auditing the company, okay? Other things. At this time, the debtors have been unable to prepare a complete list of who worked for the FTX Group or the terms of their employment. They don't even know who worked for the company because there's no record of that, okay?
What do you say you do here?
Let's take a quick break, and I have to keep going because there's more here. I know we got to go.
Well,
to break.
there is, and then there's
it gets
all
worse,
sorts
Mike.
of further implications beyond just this. I mean, we're going to be talking soon about the celebrity endorsements, and yeah, it just keeps on going.
How many pages is that, Chuck?
It's 30. I'm through 16. Mike, here's the tease for the worst part of it. One of the biggest outstanding liabilities that FTX has is $3.3 billion to Sam Bankman-Fried himself. Let's take a quick break and then we'll continue.
The Financial Exchange has a brand new text code. Text us at 617-362-1385 and keep on top of breaking business news all day long. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group, and this month we're sharing 10 important year-end financial tips to help you with decisions you may need to make about your portfolio strategy. As 2022 winds down, this guide provides essential information about topics you might want to address, including how to maximize your charitable giving, what to do about offsetting your capital gains, and being able to contribute as much money as you can to your IRA or 401k plan. Take this opportunity to evaluate your financial strategy and get your free copy of our brand new guide called the Top 10 Year-End Financial Tips. You can call 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com.
This is Tucker Silva with the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan. Today we're talking about the implications of gifting assets away. Todd, if you're trying to protect assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, in terms of Medicaid purposes, I never think giving away assets is a good idea. In fact, nothing generally good can come from them. Example, once you put them in the child's hand, you don't have control over them anymore. Many people think irrevocable trusts are scary and rigid. Think about how much control you have once you put it in their hands. You don't have any. Right. So, number one, you've given up too much control over the asset. You can't change your mind. You've exposed it to the child's creditors. Hey, you could be living your life, and a child could end up getting a divorce, and you could end up losing your house if you gave your house to your kids. So that's not a good benefit. And also, there's a lot of tax ramifications that go with it. One, if you're doing Medicaid planning, you're probably not giving it away to reduce estate taxes. So why give it away? Because if you give it away and you lose a step up in basis, then you trap the built-in capital gain and you actually give your kids a tax liability. So even if they don't kick you out, when they go to sell the house, they're going to end up paying taxes that would otherwise not have happened had you kept the property.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide this month called To Gift or Not to Gift, Tax Implications to Consider. Call 866-848-5699 or request a copy at legalexchangeshow.com. Once again, 866-848-5699 or request it at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
All right, so just continuing with a little bit from the FTX bankruptcy filing, just because I just think people need to sink in just how bad this is. In a footnote on page 9, related party loans receivable of $4.1 billion at Alameda Research, that's the hedge fund that was basically captive to FTX, consisted primarily of a loan by Euclid Way Limited, whatever, to Paperbird Incorporated of $2.3 billion. Paperbird is Sam Bankman-Fried. That's his company.
Okay.
It also consisted of 3 loans by Alameda Research Limited, one to Mr. Bankman-Fried of $1 billion. $3.3 billion is money that was lent by these companies to Sam Bankman-Fried. Personally. Like, there's the problem. Hard stop right there. I mean, like, there's all kinds of other problems.
Yeah. So if you're looking for the incompetence, there's plenty of evidence of that. But if you are looking for the evidence of intentionally stealing your customers' money, it's via loans made to your personally owned entities.
A couple other things that were just really bad. For disbursement controls, the debtors did not have the type of disbursement controls that I believe are appropriate for a business enterprise. For example, the employees of FTX Group submitted payment requests through an online chat platform where a disparate group of supervisors approved disbursements by responding with personalized emojis.
Good.
In the Bahamas, I understand that the corporate funds of FTX Group were used to purchase homes and other personal items for employees or advisors.
Nice.
There's also not documentation for certain of these transactions as loans, and certain real estate was recorded in the personal name of these employees and advisors on the records of the Bahamas.
Perfect.
Other things that are bad. They also, other bad management practices included the use of an unsecured group email account as the root user to access confidential private keys. So they had an email account with multiple people accessing it for private information.
Mm-hmm.
Not what you want. They did not do daily reconciliation of positions on the blockchain. They used software to conceal the misuse of customer funds. And there was a secret exemption of Alameda from certain aspects of FTX.com's auto-liquidation protocol. So basically, if there were forced sales happening, Alameda would not be included because it was their own entity.
So, I'm sure, do you have more to go through on the bankruptcy filing?
Couple other things. After the bankruptcy filing happened, the company still transferred $372 million in unauthorized transfers to cold wallets that they can't locate, and minted approximately $300 million in new cryptocurrency tokens.
Well, you got to pay for all the people's deposits somehow, so you got to mint some new coins.
Let's see. Mr. Bankman-Fried often communicated using applications that were set to auto-delete after a short period of time and encouraged employees to do the same. And that takes us to the end.
Okay. So, clearly a lot of blame to go for Sam Bankman-Fried, any of his lieutenants at the company, and certainly anyone that worked in any sort of finance or accounting role at this company should probably be in jail. I'm not sure that they will, but probably should be.
Yeah.
Let's go down the list of other areas to blame, because there's, a wide net being cast here for obvious reasons. So there was a class action lawsuit filed against all the celebrity endorsers of FTX. There is a lot of criticism being directed at the Securities Exchange Commission for not detecting this. And then I would also put some of the blame on customers themselves for perhaps not asking the questions, although when you're being directly lied to, you can only blame the customer so much. But I would say, look, if you are using a crypto platform or any other platform that is offering you 6% interest on your deposits, like FTX was for their Bitcoin deposits, you should probably be asking more questions. Why is FTX doing that when Coinbase and others are not? That's an important red flag to bring to your attention and ask.
The big story here, as it always is with any kind of financial transaction, is you have to know who the counterparty is that you're dealing with. Because if you can't trust them, then the whole thing doesn't work. It's shades.
And unfortunately, that was supposed to be the exact problem that crypto solved, is very clear transparency as to the counterparty to every transaction. And crypto itself did have a means of solving that, but then these platforms came along that...
There's always a human element.
Yeah.
You can't... I say this again and again. You can't get away from it the same way that you can't have your phone charged, without a plug. Something has to plug in somewhere. Likewise, you have to have a human element somewhere. It can't just all be code. And unfortunately, humans are fallible, and so is their code. So I think when I look at this in terms of, who's to blame, first and foremost, Sam Bankman-Fried and the people that worked for him.
Yep.
That's it, number one. Number two, all the people, all the celebrities that, I've rightly criticized, I think, for shilling out for this stuff because, hey, look how much this stuff is worth and we're getting paid millions of dollars. Yeah, you got some blame. Are you, criminally liable, civilly liable? Not really.
Don't know.
Advertisers, there's generally pretty broad.
I'm sure you can never work in the securities industry, but
right.
Tom Brady wasn't planning on it.
Right. There's a pretty broad range of what you can say in an advertisement.
I wouldn't even be sure that they're going to be able to go after them from the Kim Kardashian. So Kim Kardashian got charged and paid, some fine. I don't remember the dollar amount because she was doing I think it was an Instagram endorsement.
And not disclosing that it was an ad.
When you do a television advertisement, there's more leeway given because if you're watching a Super Bowl ad that it's a paid advertisement.
So I think it's pretty shameful that I haven't heard anything from Larry David or Matt Damon or any of these people, that have.
But they're not going to be willing to take any.
I don't know that there's much legal liability there for them.
The SEC.
Yeah, when you talk about the regulatory apparatus, we've talked for a while about how the SEC has been, over the course of this year, starting to try to build the case through ongoing actions that they are able to regulate this. Yeah. And I've said that they should be. I think it falls under their jurisdiction. And Sam Bankman-Fried was clearly lobbying for the CFTC, the Commodity Futures Trading Commission.
Which has no budget.
To basically cover this stuff and have an easier path.
I think if I were to put the blame on one entity, one governmental entity versus another, I would probably put it on Congress for not delegating the authority to one of these places rather than the SEC for not moving fast enough to gain the right, because the SEC can't legislate what they regulate and what they don't. All they can do is win legal cases to eventually get to do it. Congress could have told the SEC, have regulation over these crypto exchanges, regulate them as such.
And instead, Congress turned a blind eye, even though you had plenty of senators and congresspeople talking all about crypto over the last couple of years.
Sure did.
Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you know the VA provides a clothing allowance for qualified veterans?
Veterans benefits are always changing, and we've got your back. The Sit Rep is a show by veterans for veterans that answers questions about VA disability, VA home loans, VA healthcare, and even ones you didn't know you had.
Let's jump right into it. Are VA police real cops?
Allow us the privilege of connecting you with the benefits you earned and deserve. Search #TheSitRep on YouTube and subscribe today.
Gifting major assets like a primary home to your children is common in legacy planning, but it can pose major problems if you aren't careful. Call Cushing & Dolan at 866-848-5699 and ask for their brand new guide called To Gift or Not to Gift. Tax implications to consider. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group, and this month we're sharing 10 important year-end financial tips to help you with decisions you may need to make about your portfolio strategy. As 2022 winds down, this guide provides essential information about topics you might want to address, including how to maximize your charitable giving, what to do about offsetting your capital gains, and being able to contribute as much money as you can to your IRA or 401k plan. Take this opportunity to evaluate your financial strategy and get your free copy of our brand new guide called the Top 10 Year-End Financial Tips. You can call 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John. And more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular. The beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about the implications of gifting assets away. Now, Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
I think you're going to have lots of problems. In fact, to me, that's just the tip of the iceberg of the problems of giving away your home. So many people think giving it away is better than setting up a trust. It's quicker, it's easier, it's cheaper. It's really none of the above, right? If you give it away, by the way, you have not skipped out on the 5-year waiting period. You still have that. That hasn't gotten any shorter. It's 5 years whether you use a trust or you don't. Not to mention the fact that you've lost control over it. They can kick you out. And you're sticking your kids with a carryover basis, which means if there's a large capital gain built into this house, you've just given your children that capital gain and the related tax to that gain when they go to sell it, assuming they don't kick you out of the house and nothing bad happens. Not to mention the fact that you can't sell it, get the money, and then use it to buy another house with. You really give up way too much control when you do this. You keep, actually, way more control and power over your own house if you use an irrevocable trust instead of giving it away.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide this month called To Gift or Not to Gift, Tax Implications to Consider. Call 866-848-5699 or request a copy at legalexchangeshow.com. Once again, 866-848-5699 or request it at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England Healthcare. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA Cares. Time now for Wall Street Watch. Markets are pulling back a little bit today as investors react to new comments from St. Louis Fed President James Bullard, who said that the central bank's interest rate hikes thus far have only had limited effects on inflation. At the moment, the Dow is off by 0.5% or 182 points. S&P 500 is down by 1% or 38 points. And the NASDAQ also off by 1% or 106 points. 10-year Treasury yield up by 8 basis points this morning at 3.77%. Crude oil down another 2% so far today, now trading at $83.85 a barrel. Macy's revealed third quarter earnings and revenue that beat analyst forecasts, sending the stock up 12% today. In addition to its quarterly beat, the company also upped its earning forecast for the year, noting it has fresh merchandise and is ready for the holiday shopping season. In an interview with CNBC, Macy's CEO Jeff Gennett said the company can hold the line on prices because it has fresh merchandise. That has allowed the company to bring in new apparel, home goods, and other gift-giving items. He also said that the company is not seeing customers trade down to cheaper brands, and also noted that Macy's did see a drop in sales in the final weeks of October and early November. Meanwhile, Kohl's pulled back its full-year forecast this morning, citing increased volatility in the retail sector and significant macroeconomic headwinds, in addition to its unexpected CEO transition, where current CEO Michelle Gass will step down next month. The company also did not provide guidance for the holiday quarter, and this comes after the struggling retailer revealed its revenue sunk 7% in the third quarter to $4.28 billion. However, that stock is curiously up by 3.5%. I'm Tucker Silva, and that's Wall Street Watch.
Let's talk supply chains. We haven't done that in a little while. Michael, do you remember
the 21st night of September?
What the peak price, my favorite wedding song, by the way, what the peak price was for shipping a container of goods from Shanghai to Los Angeles last winter?
I want to say $27,000.
A little over $11,000.
Really?
Yeah.
Are you sure?
Yes.
Oh.
Looking at it right now.
Okay.
It's right here.
Well, fine.
Right now. Do you know what it costs now?
2 to 4?
$2,130. $2,130. And Craig Fuller, who is the CEO of FreightWaves and one of my favorite Twitter follows out there, FreightWaves, they do a bunch of real-time data tracking for anything freight related, as you would expect.
Got it.
He says, and I'm going to quote from his tweet this morning, in terms of where prices go from here, not only is demand way down compared to 2019 levels, but ocean container carriers have the largest capacity build in history coming online in 23 and 24. Pricing will likely fall to $1,000 to $1,500 by spring, with few expectations for any sort of rebound. So the story out there from a supply chain perspective, at least when it comes to getting things from point A to point B, there's no bottleneck there anymore. There might still be, hey, we can't produce enough stuff at the factory if certain things are in demand, but there's no issue getting goods from point A to point B at this point. There is, in fact, excess inventory if you look at ocean, rail, and trucking. You do have some unique things in the United States where, because so much freight traffic goes up and down the Mississippi River, which has been at really low levels recently, there have not been enough barges going up and down the Mississippi to necessarily carry all of the cargo there. But other than that, you basically have supply chains sorted out in terms of their logistics. Now, you still, again, maybe you need more labor, maybe you need more parts or whatever, but there's no issue at this point getting things from point A to point B, which is great. Big improvement from where we were a year ago. The question that I think we do have then because of this is, hey, if you've got some of these gluts that are developing in certain parts of the economy, too many grills, too many office chairs for, working from home, whatever it might be, what does that continue to do to margins of retailers that have not been able to stock properly? We saw on Tuesday, Walmart said, yeah, we've gotten our inventory levels squared away. Yesterday, Target said, we're still kind of a mess. So it's very much, as I said yesterday, I think there is no one general trend right now for retail. I think it's all about execution and how well individual companies can execute on their strategies now.
And I think, the differences between Walmart and Target that you talked about really spell that out pretty clearly. Target very much struggling with this shift to being focused on grocery items and low-cost, low-margin pieces. Walmart is seeing and experiencing the same thing, but somehow did a better job of perhaps forecasting it, or perhaps just has a better way to make money on those segments. And I've been thinking a lot about that. I do think that specifically Walmart just occupies a better space for this type of environment. I mean, if you are genuinely cost conscious, I mean, heck, there's like an entire segment of jokes about how people go into Target looking for one thing and come out with a shopping cart full of stuff and that can't help themselves. And that same joke doesn't exist for Walmart. Walmart has plenty of jokes about it.
I always thought that was more like Home Goods or TJ Maxx.
No, I think...
I feel like Home Goods is where, like, my wife goes in and is like, okay, I'm going to go get, a throw pillow.
Right.
And then it's like, and I got glasses and 2 lamps.
I think that exists for Target, too.
Yeah, I think Home Goods or TJ Maxx is like a dedicated afternoon.
I think Target occupies that space, too. And so if you know that you're trying to cut back, you're going to avoid going into a Target entirely. And Walmart actually, said on their earnings call, they're starting to see people of a different wealth segment shop at their grocery stores because of concern about inflation. And that's
and their grocery stores don't suck.
They don't. Like, they don't have shallots, but they don't suck.
When's the last time you went to a Walmart grocery store, though?
Inside it?
Yeah.
Oh, it's been a long time.
Maybe they have shallots now.
I only do the pickup.
Maybe they've got shallots now.
The other piece that I was looking at, we have a glut now of container ships. We didn't have enough container ships. We've built a bunch of container ships during the pandemic. Now, of course, we have way too many container ships. There's a company out there, and I brought this up to Mark Fandetti last week, that will convert your container ship into an above-ground pool. Which I love.
You mean a container, not a container ship.
Sorry, container.
It's a big pool.
Big difference there.
Okay.
Container, yeah. I don't have a backyard for a container ship.
You ever been to Austin, Texas?
Yes.
Container bar?
Yep.
No, I have not been to container bar.
It's a bar built out of shipping containers.
They kind of did something like that over in Somerville, that new development.
It wasn't the same. This was like multi-level, like...
Really?
Yeah, it very, very cool.
Yeah.
It was like kind of...
We'll find some creative uses for those containers.
Let's talk about the UK a little bit. So they've got... they got some problems. Before I go UK specific, I saw this morning because there's all kinds of inflation data that's coming out from different countries now because basically it all gets released mid-month.
Yep.
UK CPI, 11.1%. Italy CPI, 11.8%. Spain CPI, 10.9%. Sweden, 10.1%. France, 6.2%. All of those except Italy are all new highs for this cycle, and Italy was within 0.1% off of its high. Mm-hmm. I feel like so often we talk about inflation as if it's something that's just caused by, like, the U.S. Like, we're running everything into the ground. Why do we have such bad inflation? It's better than every one of those countries except for France.
Yeah.
Every single one of them except for... And much better. I mean, again, I'm not trying to say that the U.S. is like, hey, we're great, but more just inflation is not a local phenomenon.
Well, and I've had this conversation a few times because a lot of the concerns that we had about the United States maybe a decade ago about, will the U.S. still be the reserve currency? Look how competitive China is. The Eurozone, if they get their act together, they'll be able to really compete on an industrial basis with the United States. They're a threat. The last few years, and it goes back before the pandemic, but specifically during the last 2.5, it has been evidence to me, at least, that the United States remains and is further ahead than anyone else when it comes to global competition from a number of those different perspectives.
There's no one else you're going to trust.
You're not going to trust anyone else's currency. And, China has been the place to manufacture over the last few years, but clearly there is now some concern about doing that. And Europe is not taking that place. You go look at what's happening in places like Germany right now because of the energy policies there. You're not going to choose to locate a giant semiconductor manufacturing facility there unless you absolutely have to.
No, if you look at the theoretical alternatives to the U.S. dollar, the Chinese yuan, Hard no. You're just not. You don't know what the rules are going to be. You're not going to trust them to get your money back.
Yeah, there's no rule of law, so you can't trust it.
The Russian ruble. Obviously, you're not going to trust.
Are we
it.
even going to? Yeah, we're not going to consider it.
No, but again, like people have been talking about this for you just have to talk about it at least. The euro. The energy situation is so much worse there than the U.S. As you said, like you don't know what your costs are going. You can't say that that's how you want to set your, your business up or what you want to settle in. It's just not what works.
There at least is the rule of law there, so you could use it for settling some transactions as people do. But the interesting one, not today, but a decade or two from now, could actually be the Indian rupee. A lot of corruption, but rule of law.
Yep. Japanese yen. Huge devaluation going on this year. Yeah. I mean, you're talking like the yen is basically trading like a cryptocurrency. Mm-hmm. It's, again, not what you want if you're trying to settle large transactions and have consistency over time. So what the UK is doing right now, remember back in, it was late September, early October, right? When the
Truss's package?
The Truss government lasted 5.5 weeks.
Yeah.
Got beat by the lettuce. I mean,
happens to the best of us.
It does. Lettuce gets us. But, so they had come out back in late September, early October with this big spending package saying, oh, this is how we're going to deal with inflation. And markets said, no, you're not.
They threw up on it.
No, you're not. That's not how it's going to work. So they got booted out of office. New administration's in there. And Rishi Sunak comes in, and his finance minister, Jeremy Hunt, who is the, chancellor of the Exchequer, actually, just unveiled their budget, okay.
Which is the polar opposite.
Yes. The previous one was, I think, 45 billion pounds of additional deficit. This one is now 55 billion pounds in additional spending cuts and tax increases.
So the tax increases that they are doing, they're basically freezing the thresholds, basically freezing the brackets. So in the United States, we know that the brackets next year are going up due to inflation. In the UK, they're freezing them. They're not going to go up any higher, meaning those whose incomes are up because of inflation will pay higher tax rates because the brackets aren't moving.
Now, if you look at what's going on in European markets as a result of this, they're kind of like, we want some cutting, but maybe this is a little bit too far. So it's because the concern, and again, I'm not saying good or bad yet. I'll get to that.
Okay.
But what markets are saying is, hey, it's great that you want to try to rein things in fiscally to deal with inflation, but if you go too far, then you're going to stifle growth so much that you still end up with inflation because now you can't produce enough stuff in order to satisfy the demand that's still there, and that's not good either.
I think this is a good common sense policy that I wish we would employ here in the United States to combat inflation. I also think it has the possibility to backfire because lawmakers are notoriously bad at quickly reacting to new data.
I think this type of strategy would work in the U.S. I don't think it works in the UK for one very simple reason, and that is that the U.S. dollar is the world reserve currency. And so the issue that you have on this is that from an exchange rate perspective, it could get a little messy here. We'll see where things go, but I think that they may have gone one step too far in the opposite direction. Let's take a quick break here. When we come back, we'll talk about the latest in the greater Boston housing market.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, problems can arise. Leaving assets to your children is admirable, but it may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan, the experts in elder law and estate planning. Their brand new guide this month is called To Gift or Not to Gift, Tax Implications to Consider. In it, you'll learn about information related to the gifting process, what tax issues may arise from a significant gift like a home or vacation property, and what happens to the asset if the child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John. And more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we're talking today about our latest guide, the Top 10 Year-End Financial Tips. Mike, it's been a tough year in markets, not a whole lot of fun for anyone, but that gives some opportunities for what's known as tax loss harvesting. What is that?
Yeah, so I do want to address that tough year in markets, right? I mean, the tendency can be to just stick your head in the sand and not want to do anything, which, trust me, I can understand that, but you do need to look for those silver linings, and these are a couple of them that I think are out there in spades this year. The last few years, maybe you had some capital gains in your portfolio and you've undergone taxing on that. This year, it's very possible that you might have capital losses in your non-retirement accounts, and you can take advantage of those to, one, help out with taxes this year, but also realistically, offset any potential future gains that you might have, whether it be from a stock or a bond or a business sale or whatever it might be down the road.
There are some things that you need to be aware of when it comes to your personal situation there, so do make sure you consult a tax advisor if you're considering that. Mike, one other item on the tax side, Roth IRA conversions. Why might this be a good time?
Yeah, so again, when it comes to Roth IRA conversions, not for everybody, definitely speak to a tax expert, but hypothetically, you might be able to say, hey, January 1st, I could convert 100 shares of XYZ company. Today, with the markets being down, I might be able to get 120 at the same total value. And so, again, when markets are down, they can present opportunities like that.
Our guide is titled The Top 10 Year-End Financial Tips, and there are two ways to request it. First, call 800-393-4001, or you can request it online at armstrongadvisory.com. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you missed any of today's show, catch up whenever you want on the iHeartRadio app. Just search for The Financial Exchange for full shows and individual interviews. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
All right, the Boston housing market slowing significantly. Single-family home sales in the region fell 16.3% year over year in October, and you now have the lowest count for the month since 2011 and the fifth straight month of declining home sales. Condo sales down 22% year over year. Higher rates, not surprising.
No, it's not. But the fact that we are now seeing the fewest October sales in a decade is fairly shocking, and as we're going to talk about later in the show, companies like Home Depot and Lowe's are continuing to project really strong sales, and so far they have. I have real genuine concerns about what that looks like over the coming quarters.
Big thing, and here's the number that matters. With 30-year fixed-rate mortgages above 7%, a buyer's monthly payment on a median-priced home in the greater Boston area would be $1,500 a month more today than it was a year ago. That's just something that most families can't afford.
Yeah.
Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round, the cuisine spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com.
Let's see. We talked a little bit about Home Depot. Do you want to go into more depth on that?
Yeah, I guess this is the comment that I would like to make. So both companies reported earnings. They both did fairly well, and I think surprised some investors who were saying, look at home sales dropping off the ledge here. When's this going to catch up? Executives at both of the companies spoke bullishly about the prospects for 2023, as executives do, but I do wonder if these executives are wearing some of the same rose-colored glasses that a lot of CEOs were wearing over the last couple of years. Because as much as I am optimistic about renovations from people that are deciding to not sell their home because they've got a great mortgage rate, and so I'm going to put an addition on the back of my home, and I'm going to go to Home Depot or Lowe's to do that. The activity generated from a new home sale compared to the renovation market,
way more,
just doesn't compete.
No.
You can only repaint that room so many times.
At the peak, we were seeing annualized volume of around 6 million units a year selling nationally, existing home sales. Today it's down to around 4.7. I wouldn't be surprised if we get below 4 in the first, half of next year.
So how do Home Depot and Lowe's make that up?
I don't know.
I don't think they can.
This is the kind of thing that, again, I'm not saying that we're in recession right now, because the GDP numbers for the last couple quarters, they've reversed back to the positive side.
Yep.
You've got, there's
weekly
nothing
jobless claims out this
jobless
this
claims
morning.
are still low. You
nil.
still have unemployment low. Like, you still have growth happening now. But it's tough to look at next year and not see one coming, simply because the areas that are going to be hit, housing, autos, tech, man, that's the whole story for growth.
Yeah.
And so I know Home Depot and Lowe's are saying, yep, we're not seeing any degradation right now. That's how it always is before you start to see that downturn.
Right.
So,
I don't know. I've got some concerns about those businesses. Well run, done incredibly well the last couple of years. I don't know where the volumes come from.
So we got a whole bunch more to get to in hour 2, including latest update on Twitter. We got Amazon laying off some folks, and then the latest on the office market. All that coming up in hour 2 on the Financial Exchange.
This is Tucker Silva with the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing and Dolan. Today we're talking about the implications of gifting assets away. Todd, if you're trying to protect assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, in terms of Medicaid purposes, I never think giving away assets is a good idea. In fact, nothing generally good can come from them. Example, once you put them in the child's hand, you don't have control over them anymore. Many people think irrevocable trusts are scary and rigid. Think about how much control you have once you put it in their hands. You don't have any. Right. So, number one, you've given up too much control over the asset. You can't change your mind. You've exposed it to the child's creditors. Hey, you could be living your life, and a child could end up getting a divorce, and you could end up losing your house if you gave your house to your kids. So that's not a good benefit. And also, there's a lot of tax ramifications that go with it. One, if you're doing Medicaid planning, you're probably not giving it away to reduce estate taxes. So why give it away? Because if you give it away and you lose a step up in basis, then you trap the built-in capital gain and you actually give your kids a tax liability. So even if they don't kick you out, when they go to sell the house, they're going to end up paying taxes that would otherwise not have happened had you kept the property.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide this month called To Gift or Not to Gift, Tax Implications to Consider. Call 866-848-5699 or request a copy at LegalExchangeShow.com. Once again, 866-848-5699 or request it at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer. with free services provided online and in person with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John. And more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Did you know the VA provides a clothing allowance for qualified veterans?
Veterans benefits are always changing, and we've got your back. The Sit Rep is a show by veterans for veterans that answers questions about VA disability, VA home loans, VA health care, and even ones you didn't know you had.
Let's jump right into it. Are VA police real cops?
Allow us the privilege of connecting you with the benefits you earned and deserve. Search hashtag the Sit Rep on YouTube and subscribe today.
Gifting major assets like a primary home to your children is common in legacy planning, but it can pose major problems if you aren't careful. Call Cushing & Dolan at 866-848-5699 and ask for their brand new guide called To Gift or Not to Gift, Tax Implications to Consider. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled The Top 10 Year-End Financial Tips. Mike, with how difficult it's been in the market and in the economy this year, how important is it for a retiree or even a pre-retiree to update their assessment of how their retirement might be looking?
Yeah, I mean, it's a very common conversation that I hear happening almost daily here. It's, I was planning on retiring here. Given everything going on in the markets, do I need to delay that? Or, I retired last year, and do I need to reconsider given everything that's happened? Because it has been a historically bad year when you look at a combination of a stock and bond portfolio, which is fair. And the answer is, it depends. But you need to at least ask yourself the question.
Yeah, there are three levers that a retiree can pull. They could choose to wait to retire until later, they could choose to reduce their spending, or they could choose to increase their income somehow through a part-time job.
Right.
And any retiree or pre-retiree needs to evaluate how those options fit into their plan.
Yeah, and so, I know the temptation in a year like this year is to just settle down, don't look at it, and put your head in the sand. And that can be the right strategy for a portfolio and for your, just mental well-being. But being able to check the other stuff off the list. Take a look at the year-end financial plan and what can I do to make sure I'm still in a good spot. That's what you can be doing in a year like this.
Our guide is titled The Top 10 Year-End Financial Tips, and you can request it by calling 800-393-4001. You can also go online and request it at armstrongadvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Taking the time to review your financial strategy is always important. And with the end of the year approaching, here are some essential tips that may help with decisions you might be considering. In this month's guide, we'll walk you through key concepts that can affect your plan, such as tax loss harvesting, maximizing charitable giving, and properly calculating RMDs. All of these issues are crucial to your overall strategy, so call our office today at 800-393-4001 and get your copy of this free guide called the Top 10 Year-End Financial Tips. Let us help you finish 2022 as smoothly as possible while also preparing you for obstacles that might arise next year. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, it's Chuck, Mike, and Tucker kicking off the 11 o'clock hour, and stocks continuing their womp-womp from yesterday. Dow's off 253 points. Right now, the S&P's down 46. NASDAQ down 124. Russell 2000's down about 1.5%. 10-year Treasury also selling off, back up to 3.78%. Oil, West Texas Intermediate, also selling off, down 287 a barrel to 82.72. Gold, 1761.60 an ounce, down 14. So basically everything is selling off today.
Looks like it.
And in the crypto space, it's just, again, a raccoon-infested mess, and I don't know who you can trust over there right now.
Yeah, I guess a theme that seems to be playing out is when expectations are shifting about what the Fed is going to do after comments from, who spoke this morning from the Fed?
James
Bullard spoke and basically insinuated that he thinks the Fed needs to keep going because there hasn't been much of an impact from their moves yet. And when that happens, everything sells off. Last week, likewise, when inflation data came in better than expected, everything gained. Bonds gained, stocks gained, everything went up.
Can we talk Bullard just briefly?
Sure.
So I found a couple things notable from Bullard. First, the quote, "The policy rate is not yet in a zone that may be considered sufficiently restrictive." So I found that to be informative.
Yep.
The second piece is that his presentation said that 5%, which is currently being priced in as what's known as the terminal rate, like the highest that the Fed will raise this cycle. He's saying, hey, that might be the low end of where we need to be, and the upper range could actually be closer to 7. And so the reason that I like Bullard is not because he makes things go down, but rather I like Bullard because he has a very clear role in the Federal Reserve System, which is to stake out the furthest that they are willing to go at any point in time.
Yep.
And so I think that the nice thing about it is that if you're just trying to mentally work through, okay, where could yields go to and how, you say, okay, like, yes, granted 7% is a big continued move from where we are today. It's 3% higher than where the Fed funds rate currently is. But you sit there and you say, hey, now at least he's outlined over the next 12 months. That's as toppy as he thinks they could possibly get.
All of that having been said, it doesn't preclude him from being wrong, because I would imagine if you talked to him this time last year, I would guess that he had a terminal rate for Fed funds that was no higher than 2%.
I just find it so interesting that, and again, I'm as concerned about a potential recession next year as anyone, but I just find it fascinating that despite Powell at the beginning of November saying we got to go higher for longer, the market still wants to price in rate cuts by September of next year.
Yeah, the cuts make no sense. The terminal rate, he was pretty wishy-washy on where the terminal rate is, and he said, honestly, don't focus on that. But he was very clear about one thing. You should focus on the fact that we believe we're going to need to get rates somewhere and hold them there for longer. And he was trying to, I think, reset these expectations of rate cuts, and they just keep making their way back into expectations, rallying markets, increasing asset prices, and his words don't seem to be sinking in on that.
And the piece that is really kind of that I'm trying to reconcile with why markets are pricing in what they are, and again, there's always delayed fuses on slowdowns and this and that. But the Atlanta Fed, okay, they put out a feature it's updated usually I think once a week or so. It's called GDP Now. It's their real-time estimate of where they think GDP is going to be. And early in a quarter, They usually start at about a month into the quarter. It's not the most accurate, but we're now 6 weeks into the quarter. We're halfway through. And the Atlanta Fed's GDP Now estimate is currently coming in, this is for Q4, at 4.2% is what they're projecting. That's after inflation, by the way. So you look at this, and granted, it might not, there's a wide error band there. It's usually within about 1% either way, but GDP is not going to be shrinking. It is very, very likely to be growing for Q4. And so if you are pricing in rate cuts by the September 2023 Fed meeting, you're saying that things need to get so bad in the next 2 quarters that there are going to be cuts immediately after that. And that's
equity markets aren't pricing that in.
No, and that's the thing.
It can't be both.
One of these markets is lying. Either the bond market is not acknowledging the growth in inflation that is going to continue where, hey, we need to go higher for longer, or equity markets are not acknowledging that things are going to get a whole lot worse. Because, again,
which is the same problem we were facing this time last year. The same exact one.
If you want to argue for rate cuts, because, again, let's go out 9 months. Inflation rate, I don't know what it's going to be, but it's probably not going to be 2.
I would agree there.
Okay, it's probably not going to be 2. So if you're arguing for the Fed to start cutting pretty aggressively, there are now, let me get the number just because I want to have it correct for longer term. There are now, by the end of 2024, 6 rate cuts being priced in. So if you're going to argue for that scale of cuts beginning in next September, then your recession has to be pretty significant, and the S&P 500 should not be hanging out around 4,000 if that's the case.
Most certainly not.
So one of these markets is not acknowledging reality. I don't know which one it is, which makes me a little bit nervous. It makes me feel like, oh, gee, like which one is it? But ultimately, okay, if you look at how most of these cycles end where we're dealing with high inflation and hiking, usually the equity market is lying at this this stage, okay?
Although I will also bring up, we don't have a large sample size.
No, the sample size is tiny, so it's
one.
This is
it's
really
the 70s
unique.
And 80s. It is.
And even the 70s and 80s is still different from this specific one.
Well, of course it is. 50 plus years ago. Yeah, it is different.
So it's messy here. Let's talk a little bit about Amazon. Corporate staff cuts potentially coming for 10,000 employees.
Yep. Offering buyouts in some cases, but hitting their retail, devices, human resources divisions, looking to cut the corporate staff by roughly 3%. So I know when we think about Amazon, we all think about the warehouse workers. Does not seem to be that there's going to be any need to cut there. But on the corporate division side, they are looking at the same types of cuts that many other tech platforms have. And I expect that we will see those. And I do have to say, and I know that there's sampling bias in all of this, but when I think about over the last few months, I think I can count 4 different individuals who either were laid off or offered a package to leave their company in the last 4 months. And they are not they're not all in high tech. I mean, I had somebody I know in recruiting in high tech that was facing that situation. I know somebody in the medical industry, somebody in media advertising, somebody over at a telecom, somebody at an automaker. Those are 5 very different industries, all of whom were facing either a layoff or a buyout, to go ahead and pull back or retire.
The piece that is really interesting to me, so you've got, again, this all works on different timelines and everything, but, and this is getting back to the Fed as it relates to these layoffs. You've got Amazon laying off. Now, you got a whole bunch of tech companies that are laying people off, but tech it's a small chunk of the overall employment market.
Yeah, big compensation, but not a massive part.
And it matters. I've made the argument that, hey, as tech employees are laid off and those salaries don't spend money in their communities, that would be kind of your next line of layoffs that come. But again, it's a delayed fuse. If Jimmy gets laid off from Twitter last week, okay, and is no longer making $400,000 a year at Twitter, he's got some savings built up. He'll still spend for a little. It's not something.
His house isn't going for a fire sale.
The restaurant that he goes to every Friday doesn't say this week, well, Jimmy didn't come in, now we've got to cut. So there's a delayed effect there. But here's where I'm going with this in terms of what the Fed's looking at and why I tend to lean towards the Bullard view of things. Q1 of this year, GDP, minus 1.6%. Q2, minus 0.6%. Q3, positive 2.6%, and Atlanta Fed has GDP now projecting 4.2 for Q4.
Okay.
Mike, that is a 3-quarter trend of accelerating GDP growth.
Yep.
So to anyone who is making the argument, hey, the Fed needs to start, at some point you have to see the actual evidence showing up that the economy is slowing and demand is slowing to bring inflation down longer term. And those facts are not in evidence right now. The economy, in fact, is accelerating, and that's not something that we could say in the first half of the year.
Yeah. I mean, look,
and this is also why the whole recession thing, again, it might be, let me just, one last piece on this. It might be accelerating, but does anyone still think this feels good?
No.
No, and that's why this whole argument of, was there a recession in the first... Who cares what... Are you going to sit here now and say, like, everything's great? Like, no, it's not. It still is not good. You still have inflation that's too high. It's outpacing wages. That's not where you want to be. So all of the arguments in the first half of the year about, is this recession or not? Guys, all that really matters is, are you able to get what you want at the prices you're willing to pay at the time that you're willing to pay them?
Retail sales rose 1.3% in October. Initial jobless claims, we've been saying, have continued to hit very low levels. I don't see indications that the Fed's pain that they are attempting to inflict is inflicting pain.
And that, to me, means that they're going to have to go, as Jay Powell said, higher for longer on rates, and that's not being reflected by the bond market. And if it's not being reflected by the bond market, it's probably also not being reflected by the equity market because, as we've seen this year, equities and rates have kind of moved in opposite directions. Interest rates up, stocks down has been the trend we've typically seen. So, again, just some things that are catching my eye as we look at what's going on right now. Let's take a quick break here. When we come back, the latest from...
Muskapalooza.
Yeah, from the chief twit, as he refers to himself. Elon Musk coming up next.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John. And more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, problems can arise. Leaving assets to your children is admirable, but it may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan, the experts in elder law and estate planning. Their brand new guide this month is called To Gift or Not to Gift, Tax Implications to Consider. In it, you'll learn about information related to the gifting process, what tax issues may arise from a significant gift like a home or vacation property, and what happens to the asset if the child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group, and this month we're sharing 10 important year-end financial tips to help you with decisions you may need to make about your portfolio strategy. As 2022 winds down, this guide provides essential information about topics you might want to address, including how to maximize your charitable giving, what to do about offsetting your capital gains, and being able to contribute as much money as you can to your IRA or 401k plan. Take this opportunity to evaluate your financial strategy and get your free copy of our brand new guide called the Top 10 Year-End Financial Tips. You can call 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you know the VA provides a clothing allowance for qualified veterans?
Veterans benefits are always changing, and we've got your back. The Sit Rep is a show by veterans for veterans that answers questions about VA disability, VA home loans, VA health care, and even ones you didn't know you had.
Let's jump right into it. Are VA police real cops?
Allow us the privilege of connecting you with the benefits you earned and deserve. Search hashtag The Sit Rep on YouTube and subscribe today.
Gifting major assets like a primary home to your children is common in legacy planning, but it can pose major problems if you aren't careful. Call Cushing & Dolan at 866-848-5699 and ask for their brand new guide called The Do's and Don'ts of Gifting Assets. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Stream the show every day on the iHeartRadio app or watch the guys live at financialexchangeshow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
Elon Musk yesterday sent an email to all remaining Twitter employees, and it was titled "A Fork in the Road."
It was.
It was.
There's a Google document, a Google form that he actually requested that everyone fill out at Twitter, and it basically told them that either plan for an intense work regimen or get out.
Do you find it interesting that this email was sent out the same day that he was testifying in his shareholder compensation lawsuit from Tesla, that he was trying to no longer be the CEO of Twitter and that he wanted to find someone to take the job over for him? Because here's what I find interesting about
theory
that.
Here?
Well, it's not a theory. I find it very interesting that he's saying, hey, you got to work long hours at high intensity, but I'm going to hire someone else to run this because I don't want to work long hours at high intensity here.
Yeah.
I mean, doesn't it kind of come off that way?
There seems like there would likely be very few places that would be worse to work right now than Twitter. Maybe FTX. FTX would be worse.
Well, because you can't. Actually, no. They did say that they were going to be keeping people on through the bankruptcy just because they need to settle
that
everything.
Would be worse. Because There is, in the story that we were talking about earlier, there's one employee who threw up in a trash can when they learned about the news on the news about their company, because there was no company announcement about FTX turning out to defraud all their investors. And
here's the problem that and again, this is from watching. What has it been, 2 weeks now that he's been leading Twitter?
Something like that.
Elon Musk thinks that Twitter has an engineering problem. He's talking about, we want people, the coders are going to be the ones who lead the company. That's how we're going to make the company better. Like, we need to code better and do blah, blah, blah. Twitter's not an engineering company. This is not about building a better rocket. No one joined Twitter because they said, wow, this company is engineered so well. In fact, a lot of people who are on Twitter are like, man, this stuff isn't, great, but I'm here because of all the people that I can interact with and blah, blah, blah.
It does seem like a misread. It's not, this is a weird analogy, but Apple's engineering of their iPhones is not what sells Apple's iPhones.
They are worse phones than Androids in most facets.
It's because they are a popular item to have. They are a fashionable place to be, and Twitter is losing some of that luster. And if you want to focus on something, Elon, bring that back. Find a way to bring the luster of Twitter back. You have that ability. You are a very magnetic personality. People listen to what you have to say.
Yes.
Don't focus on the plumbing of Twitter. That does not seem to be the issue.
No one cares about the engineering.
Moving from short form to long form tweets is not going to be the item that moves the needle here. You need to, first and foremost, it seems to me that you need to do something to calm your advertisers, because if you don't, you're not going to have a platform in a few months. But once that is accomplished, you need to find ways to, succeed on the criticisms that you had of, he was out there when he was talking about acquiring this company, criticizing executive management because, the last time Justin Bieber tweeted was 3 years ago, and all these celebrities have left the platform. Find ways to bring them back. That's how you will succeed.
What are you going to do to bring them back? Because charging them $8 for a blue badge, it's not going to do it. And by the way,
just results in you getting trolled.
When you have big advertisers leaving, you can't make that up $8 at a time.
Yeah,
you just can't. So I don't think the first 2 weeks has gone well for Elon helming Twitter. I think there are some very real issues there that are not engineering related.
Do you buy it when he says to his employees that bankruptcy is a possibility here?
Yes.
Yeah. It doesn't seem like something you go and lie. Certainly he uses scare tactics with employees to get them in line. I think we've seen that from a number of his companies. But it doesn't seem like something you go tell your employees unless you are seriously considering it.
No. Again, I think it's going to be something where, unfortunately, the people that Elon needs are people that can court advertisers and build a platform that responds to advertisers' needs. Because ultimately, I know we always talk about if you
just kind of arbitrarily fired half of those. So.
We talk about if you're not paying for the product, you are the product, and sometimes that's true. But ultimately, Twitter needs advertisers. If it doesn't have, and it needs your eyeballs to sell. If it doesn't have advertisers that want to get in front of your eyeballs, you're not going to make that up $8 at a time. Right. Twitter had $5 billion a year in revenue. So if you call it $8 a month, okay, $100 a year, $96 a year. If you want to get to $5 billion in revenue, $96 at a time, you got to get 52 million people paying $8 a month, okay? Tucker, you're on Twitter. I'm on Twitter.
I am. At Chuck Zodda.
You going to pay $8 a month to get verified? You might.
I might.
You might. I won't. Because I don't care if I'm all I care about is reading what's going on Twitter.
Yeah, I think you would have business customers, but also
there aren't 52 million people that are going to do that.
And you've just proven that you're not doing anything to genuinely verify.
No, that's the other piece. Is you had all
you can't say, hey, we're doing verification and now you have to pay for it. But then we're not doing the verify part.
No, and then you've got, a fake Nintendo account with Mario giving the finger to everyone.
You've got a fake Eli Lilly account saying that there's going to be
free
insulin.
Which tanked the stock.
Why would you advertise on this platform right now?
You've got the Italian Elon Musk saying, I send the calzone into space. You guys saw that one, right?
No.
No, I didn't.
It's a Twitter account that goes by Italian Elon Musk, and it was verified and saying, I send the calzone into space.
I feel like his own employees are just trolling him so hard right now. You know somebody at Twitter had to approve that account.
Now, the one thing I will say, so there's been a lot of criticism of Elon for, when employees are posting, criticism on Twitter of what he's doing. He's like, okay, I'm firing this person. Guys, if you're critical of your manager in a public way...
Yeah, you're going to get fired.
You're going to get fired from just about any company. Like, there's a way to handle it and there's a way not to. So I don't really blame him for that kind of stuff. Let's take a quick break. When we come back, latest on the commercial real estate market.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. With the year almost over, now is a great time to evaluate your portfolio strategy and see if any adjustments need to be made. Our brand new guide offers information on a variety of year-end financial tips that may help with this process. The guide will discuss several key topics, including harvesting losses, ways to maximize your charitable donations, gifting assets to family members, and lowering your taxable income. Call us today at 800-393-4001 and request your free guide called the Top 10 Year-End Financial Tips. The holidays should be a joyous time for all of us, so take the time to read through this guide and don't forget about the importance of your financial plans. Call 800-393-4001 to get your guide, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you know the VA provides a clothing allowance for qualified veterans?
Veterans benefits are always changing, and we've got your back. The Sit Rep is a show by veterans for veterans that answers questions about VA disability, VA home loans, VA health care, and even ones you didn't know you had.
Let's jump right into it. Our VA police, real cops.
Allow us the privilege of connecting you with the benefits you earned and deserve. Search hashtag the Sit Rep on YouTube and subscribe today.
Gifting major assets like a primary home to your children is common in legacy planning, but it can pose major problems if you aren't careful. Call Cushing & Dolan at 866-848-5699 and ask for their brand new guide called To Gift or Not to Gift. Tax implications to consider. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Fall is in full swing. The cool nights are here, and that means winter is on its way. So if you're thinking it's time to book your next vacation, I've got the place for you. The United States Virgin Islands are St. Croix, St. Thomas, and St. John. And more travelers visited the islands in the last few years than at any point in their history, making the USVI arguably the most popular spot in the Caribbean. The weather is 75 and perfect all year round. The cuisine is spectacular, the beach is incredible, and the list of water sports is endless. Learn more at visitusvi.com and explore all that St. Croix, St. Thomas, and St. John have to offer. In the American Caribbean, there's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com and check out their incredible vacation packages. Make your plans today at visitusvi.com. That's visitusvi.com.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about the implications of gifting assets away. Now, Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
I think you're going to have lots of problems. In fact, to me, that's just the tip of the iceberg of the problems of giving away your home. So many people think giving it away is better than setting up a trust. It's quicker, it's easier, it's cheaper. It's really none of the above, right? If you give it away, by the way, you have not skipped out on the 5-year waiting period. You still have that. That hasn't gotten any shorter. It's 5 years whether you use a trust or you don't. Not to mention the fact that you've lost control over it, they can kick you out, and you're sticking your kids with a carryover basis, which means if there's a large capital gain built into this house, you've just given your children that capital gain and the related tax to that gain when they go to sell it, assuming they don't kick you out of the house and nothing bad happens. Not to mention the fact that you can't sell it, get the money, and then use it to buy another house with. You really give up way too much control when you do this. You keep, actually, way more control and power over your own house if you use an irrevocable trust instead of giving it away.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide this month called To Gift or Not to Gift, Tax Implications to Consider. Call 866-848-5699 or request a copy at LegalExchangeShow.com. Once again, 866-848-5699 or request it at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Wall Street's volatility continues as inflation remains a factor for investors and the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
The headline from the New York Times is why office buildings are still in trouble, and the correct answer is because
nobody's going to them.
No one's going to them.
Ding, 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 ding.
I have some data, actually.
Castle?
Yes, the Castle Systems weekly occupancy data for the last 3 weeks in November. So Castle Systems, they are a security company, and they track badge swipes.
Yes.
Okay, so they're telling you how many people are actually going in and out of buildings on any given week. And they're comparing things to before COVID hit. In the first week of November, okay, the average occupancy was at 47.6 compared to pre-COVID. In the second week, it was 47 even. And in the third week, it is 47.5. So basically hanging out right around 47. The interesting thing is that there is a clear daily trend that is occurring here. The lowest occupancy, not surprisingly, Fridays. A lot of companies going remote Fridays as like a perk to their employees.
Yep.
Castle Systems only saw occupancy at 32.2% of pre-pandemic levels for the last 3 Fridays. On the other hand, for Wednesdays, 56%. Wednesday is the in-office day for 56% of people.
Traffic confirmed.
Yeah, Wednesday is the worst. Even though what I will say, the interesting thing about Fridays, because so many people are working remotely, I feel like an awful lot of people take the afternoon off, and traffic on Friday afternoons
At 2 o'clock.
It's
awful.
all day.
Yeah.
Like, no one works at 2 o'clock in the
Weekend starts on Thursday now, people.
It really does. I'm dead serious because you try to go anywhere afternoon on a Friday now.
I won't do it.
And it's just brutal. It used to be like, oh, if I get out by 1:30 or 2, I can beat the traffic. No, you got to leave at 4 a.m.
Yeah, rush hour.
You got to leave at 4 a.m.
Rush
I'm
hour.
going to be really interested.
Friday.
I'm planning on traveling for Thanksgiving on Tuesday afternoon, and I suspect it's going to be as bad as it is on Wednesday afternoon.
See, I always preferred going down Thanksgiving morning. Thanksgiving morning is the best time to travel.
Like plane or car?
Either one.
Yeah.
Because no one's there.
Boat.
No one's anywhere.
Train.
Yeah.
I've never been on a boat on Thanksgiving.
I don't think there are.
I've never done a train either. But either car or plane, Thanksgiving morning is the best.
Yeah, I've experienced that.
So,
but then you don't get the awkward drunk uncle stories on the night before Thanksgiving, which is always
instead
nice.
you get them on Thanksgiving.
Yeah.
Or you're
I like a few nights of that.
Random person from high school that you didn't want to bump into
Right.
at a bar.
Yeah.
You don't
get those experiences.
Like,
I never.
God, this guy.
Other than the COVID pandemic, I've never done Thanksgiving at home, so I've never actually had that experience. But yeah, I know that's a rough one.
Yeah, the night before Thanksgiving, I believe
It's one of the worst traffic days of the year.
Well, I was going to say, I think it's like either the second or third worst for DUIs also because of the very thing that you guys described.
Yes.
I think it's basically...
Oh, yeah.
I think it's
amateur hour.
It's New Year's Eve, I think 4th of July, and then the night before Thanksgiving, I believe.
Yeah. Not great.
So I'm telling you,
Don't
Thanksgiving morning is the time to go anywhere. But let's talk about offices because that's how we started this.
Oh, yes.
Oh, sorry.
How did we start talking about...
Traffic.
Oh, yeah.
Yep.
Offices. So... You've got clear occupancy issues with office space.
Specifically, it seems downtown metro offices are the... Well, that's just the area that we have data on.
Yes.
There's not a whole lot of great data on occupancy rates in Westboro, Massachusetts.
No. But I think what's interesting about this to me is if we're talking about going into an economic slowdown, if you as a company have a choice of, hey, our lease is up at 1 million square feet in Manhattan and we can reduce that by 50%, or we need to cut 5,000 employees.
You're taking the office space every day.
Get rid of the office space. We can keep all of our people and cut our cost.
Yeah.
And so this is another thing that's really unique about this cycle because of the technology that's available now that wasn't in previous business cycles, where you look at it and you say, hey, employment's holding up. Is part of that just because companies are cutting on the plant and equipment side instead of on the employment side? And if that's the case...
Inflation could come down because of it.
Well, inflation might not come down because you're still having that payroll coming through strong.
Yeah. Yeah, it depends where it goes.
Correct. And obviously, you still have a whole bunch of commercial real estate companies that could go belly up. Or belly under? Go under? Belly up.
Professors at Columbia and NYU did a study showing that they forecasted U.S. office buildings could plunge by 39% in New York City. Corporate
That's
office,
the value of them.
The value, not the rent collected, but the value.
I thought
of those
you were talking about
buildings.
the actual office building, sinking 39% into the ground.
The inventory isn't anticipated to sink by 39% either. But in New York City, taxes collected from office towers totaled $6.8 billion in the fiscal year that ended in June. That compared to $7.5 billion in the previous fiscal year. So this is starting to flow through. I still continue to think that it takes a while, as we've talked about, because leases don't come up every year. In the same way that we don't see inflation from shelter costs moving dramatically when renewals come up, it's even more spelled out when it comes to this sort of thing because of the fact that the leases tend to be a lot longer term than when you are renting your own studio apartment in Manhattan.
Folks, the Armstrong Advisory Group has a guide available this month titled The Top 10 Year-End Financial Tips. And yes, it's not quite the end of the year yet. You still have another 13 days in November and then 31 more in December. But the reason that this guide's available right now is so that you can actually have time to read through it, figure out which ones of these apply to you, and then actually go and execute the applicable ones prior to year-end. It doesn't do you any good to get a top 10 year-end tips list on December 31st. You can't do anything with it. So, what kinds of items are in this guide? Hey, do you know if you have a required minimum distribution to take from a retirement account this year? How do you figure out if you do? How much do you have to take? What are the penalties if you don't take that RMD? That's one of the items. Also, this has been a year where you've had all kinds of losses in different kinds of markets. How do you potentially look at that from a tax perspective and figure out, hey, is there anything I should be doing in order to improve my tax situation this year? There's a bunch of other items. Again, there are 10 of them in this guide. How do you go and request the guide? First option, go to armstrongadvisory.com, click the monthly guide button, and then you can request it there. Second option, 800-393-4001. That's the phone number. That number again is 800-393-4001. The guide is titled The Top 10 Year-End Financial Tips. And again, 2 ways to get it. The first one, go to armstrongadvisory.com, click the monthly guide button, and you can request it there. Or you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
File this one under things that you don't see in a loosening labor market. Starbucks union to strike at more than 100 locations on Red Cup Day. That's what I got.
Yeah.
I
didn't even know what Red Cup Day was. I'm sorry if I'm missing out on something.
Is that the Toby
here,
Keith song?
No.
No, that's Red Solo Cup.
Yeah, very close. But yeah, more than 100 unionized stores are planning this strike on what is apparently the biggest sales day of the year. Is this when they I know that there's like you bring your mug in, but is this when they actually transition from the traditional white Starbucks cups to the red Christmas cups, or have they already done
It's a free red reusable cup.
Yes.
But
it's their holiday cup.
I know, but is this the day in which, okay, when I go into Starbucks,
Yes.
I don't get a white cup anymore, now I get a red cup by default?
Yes.
Mike, you're talking to someone who doesn't
Does
drink
not
coffee.
drink coffee, yeah, okay.
That's my impression.
I forget about that sometimes.
I didn't know this was a thing, to be honest.
You did or did not?
Did not.
What
Nor
day
did
is
I.
Red Cup Day?
Today.
Oh!
It's the whole point of this.
And they're going on strike.
I do
golly
like
gee willikers.
I do always like the creativity of some of the union strikes. So in this case, they are going to be giving out reusable red cups that feature the Grinch's hand holding an ornament with the logo of Starbucks Workers Union. So that's creative.
What other kinds of creative union things have you seen?
On my college campus, when they used non-union labor for a construction project, they brought a giant inflatable rat and protested.
Yeah, you see those in a lot of them. Yeah.
I like that.
Yeah, the
pretty
rat's always good.
Mm-hmm.
Yeah. I'm trying to think if I've seen anything else.
I haven't. Just a lot of signs and stuff. Protesting. Whatever.
I think what would have been, what would have been fascinating is if, like, for the John Deere strike, if they had all refused to mow their own lawns.
Yeah, I don't know how that really sticks it to John Deere.
I don't
yeah.
either.
It
Or
seems
maybe
like an inconvenience
somehow
for
you
them.
Somehow you get the
Just a problem waiting to happen with your condo board.
No, you get the the facility landscapers to get on board as well, and they don't mow the lawn for the John Deere facility.
That'd be good. Yeah.
Not that there's probably a lot of lawn around it, but maybe like John Deere corporate. I'm sure there's a lawn there.
Yeah.
Or they
Something
just
like that.
mow their lawn with a Craftsman mower. One of their competitors.
Or just like
It's a Honda.
no, or like you just like mow like crap, just like really badly.
With like those old school
Yeah, you
1950s.
get the old just like the
push
thing
and it
without the
spins.
motor.
Yeah.
Yeah, you,
I had that at my previous house. I lived on 1/10 of an acre at my previous house, and the previous owner left one of those just push rotating mowers there.
Yeah.
And I used to get made fun of by all my neighbors for using it, but it was like it's good exercise. It finally broke, and I had no choice.
yeah, you
but to
looked good for a
upgrade.
couple of years.
Yeah, I did.
Yeah.
That was a long time ago.
Let's take a quick break here, and when we come back, it's time for a little bit of Stack Roulette.
Stay in touch with the show by joining our exclusive text club. Text us at 617-362-1385 and use keyword Barry. Let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, problems can arise. Leaving assets to your children is admirable, but it may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan, the experts in elder law and estate planning. Their brand new guide this month is called To Gift or Not to Gift, Tax Implications to Consider. In it, you'll learn about information related to the gifting process, what tax issues may arise from a significant gift like a home or vacation property, and what happens to the asset if the child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you know the VA provides a clothing allowance for qualified veterans?
Veterans benefits are always changing, and we've got your back. The Sit Rep is a show by veterans for veterans that answers questions about VA disability, VA home loans, VA healthcare, and even ones you didn't know you had.
Let's jump right into it. Our VA police real cops.
Allow us the privilege of connecting you with the benefits you earned and deserve. Search hashtag the Sit Rep on YouTube and subscribe today.
Gifting major assets like a primary home to your children is common in legacy planning, but it can pose major problems if you aren't careful. Call Cushing & Dolan at 866-848-5699 and ask for their brand new guide called To Gift or Not to Gift, Tax Implications to Consider. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled The Top 10 Year-End Financial Tips. Mike, with how difficult it's been in the market and in the economy this year, how important is it for a retiree or even a pre-retiree to update their assessment of how their retirement might be looking?
Yeah, I mean, it's a very common conversation that I hear happening almost daily here. It's, I was planning on retiring here. Given everything going on in the markets, do I need to delay that? Or, I retired last year, and do I need to reconsider given everything that's happened? Because it has been a historically bad year when you look at a combination of a stock and bond portfolio, which is fair. And the answer is, it depends. But you need to at least ask yourself the question.
Yeah, there are three levers that a retiree can pull. They could choose to wait to retire until later. They could choose to reduce their spending, or they could choose to increase their income somehow through a part-time job.
Right.
And any retiree or pre-retiree needs to evaluate how those options fit into their plan.
Yeah, and so, I know the temptation in a year like this year is to just settle down, don't look at it, and put your head in the sand. And that can be the right strategy for a portfolio and for your, just mental well-being. But being able to check the other stuff off the list. Take a look at the year-end financial plan and what can I do to make sure I'm still in a good spot. That's what you can be doing in a year like this.
Our guide is titled The Top 10 Year-End Financial Tips, and you can request it by calling 800-393-4001. You can also go online and request it at armstrongadvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Winter is coming, and if you're ready for your next vacation, visit St. Croix, St. Thomas, or St. John. Enjoy first-class resorts, exquisite cuisine, and perfect temperatures all year round. No passport is needed. There are no more domestic travel requirements to enter. Head to the American Caribbean today. Go to visitusvi.com to book your trip. That's visitusvi.com.
All right, I've got a confession.
Oh.
It's okay.
Toyota just unveiled a new Prius yesterday.
Chuck's going to buy a Prius.
I'm not going to buy it, but it looks freaking awesome.
It does look like the prettiest Prius that we have seen.
The front of it looks like a Lamborghini.
It's pretty sharp.
I'm looking at this right here, Mike, and just tell me that the slope of the nose doesn't look like a Lamborghini.
Yeah. No, it does. It looks sharp.
It's pretty sharp. Now, again, I don't think I'll be buying one of these, but
I feel like you have spoken about driving a Prius in the snow, and
Horrible.
I feel like you've brought that story up on more than one occasion.
Yeah, it's so.
Although they're coming out with an all-wheel drive Prius.
8 years ago, I had to borrow my dad's Prius for a little bit because I had some issues with my car, and I borrowed it, and it snowed, and I was trying to get up a relatively mild hill in Somerville at the time to get home.
5% grade.
I couldn't get past the first 10 feet. It was just the car is so light and the tires are so narrow that it could not get up the most slight of hills with any kind of snow on the ground. So that kind of colored me with, a bad taste in my mouth. But the new one, I got to say, looks nice. The gas mileage is going to be even better.
57 miles a gallon,
57 miles a gallon.
Engine.
They've got a plug-in version that will get 37.5 miles of charge without having to switch over to any gas. That's up from 25 miles of charge on the current plug-in. And I really think that the plug-in hybrid option is going to be the best of both worlds for most people for the foreseeable future.
Yeah.
That's where I'm personally looking for my next vehicle at this point.
If you have one vehicle And occasionally, if you ever leave your own state, then the plug-in hybrid is going to be the way to go. If you have multiple vehicles, it might be a gas-powered and an EV. But for the family with one car that needs to be a utility vehicle that does a lot of different things, the plug-in hybrid seems to make a lot of sense. This one makes 38 miles on the electric battery.
37 and a half. Yeah. Get me 30 to 50 miles on electric, and then give me great gas mileage elsewhere. That's attractive to me.
Consumer Reports just had a survey the other day that said gas-electric hybrids were the most dependable vehicles sold in the country this past year.
Hyundai's got some really nice plugins that they have as well for their Tucson and Santa Fe SUVs.
My brother drives a very old Volt. I think it's not very old. It's not like 15 years old, but it's like 6, 7 years old. And he said the battery is pretty much shot, especially in the winter. I get no real charge on it.
Yeah.
But he's like, but the hybrid engine gets such amazing mileage. I'm still getting 40-plus miles to the gallon. I don't care.
Yeah.
It is a real solution, I think, out there for the transition vehicle. Great news for everybody out there. Lab-grown poultry clearing the first hurdle at the FDA. Growing chicken in a Petri dish. And I think, the only conclusion that I come to this, and I don't know that, I think we will end up probably trying this in our lifetime, or at least it being on markets in our lifetime. It just has to go through a USDA review next. This spells disaster for Beyond and Impossible Foods.
Because this is not plant-based chicken.
Right. This is chicken that they genetically grew in a lab.
Yes, they just grow a chicken breast in a lab without having to have the whole feathers and everything.
Now, I think there are many that would argue that, when you eat organic meat that was raised on a farm, that it tastes different, right? When you're talking about high quality Wagyu beef compared to a lab grown piece of chicken, I think there's going to be a different flavor.
Who's eating high quality Wagyu beef?
No, to like a lesser
grass-fed
example.
steak
Grass-fed
compared
steak,
to
yes.
there is a flavor difference, and that is going to be apparent here.
Wagyu beef.
But I don't know, like this.
Everyone can taste the difference in the really good caviar to the just average stuff.
Yeah.
I've never actually had Wagyu beef. I've
never had caviar.
I just see it at Wegmans.
I don't even know where you get it.
See, I have
Where
not
do you
had
even get caviar?
Wegmans, most grocery stores have it.
They do?
Yeah.
Sure.
What section?
8.
At Wegmans,
8?
it's in the cheese section.
I don't know.
It's in section of 8 of every grocery store out there. At Wegmans, I know it's in the cheese section.
That makes sense.
Yeah, I've never tried caviar.
I don't like it. Not a fan. But this is really interesting to me. Like I said, I think it's a real problem for some of those companies. The point that was brought up to me by Jim Polito this morning when I talked to him about this, because we talked about lab-grown chicken this morning, wouldn't it be nice if they could focus on organs? Not to eat, but like if you can grow a piece of chicken in a lab, how close are we to be able to grow a heart in a lab?
Mike, it's a lot. Michael.
How close are we?
Mike, this you have to eat and digest.
Yeah.
It doesn't have to do anything. It doesn't have to flap. It doesn't have to.
I recognize
doesn't have
that.
to function.
But doesn't this insinuate to me that we are like a couple decades away from that?
No.
Okay.
Couple weeks, maybe.
No, that's like saying that because you can shape a piece of marble, you should be able to make a volcano.
Okay. Fair enough.
That's where I'm going with it. But I'm interested in trying this.
Oh, I want to try it.
I want to see what the deal is.
Not good news for farmers either.
Could be.
Could be.
Well, the shortages they're seeing,
Let's take a break for the rest of the day. Why don't we think about it for 22 hours?
We'll revisit this tomorrow.
And then we'll come back and revisit it tomorrow.
We probably won't.
But we might.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, problems can